Gary, so nice to see you again this week.
So nice to see you, Daniela. How are you?
Very well, Gary. Thank you. Gary, who joins me all the way from beautiful Hawaii. And today we will be speaking about candlesticks and Heikin-Ashi charts, which I believe means Japanese average, right, Gary?
That is correct, yes.
And we'll get started in just a second, Gary. But before we do, I just wanted to get some quick thoughts from you regarding the situation in China. We're seeing stagnating growth there right now. And how is that impacting or might impact the precious metals landscape?
Well, absolutely, absolutely. The one thing is that what we noticed last week was the plans China has to actually steamroll the economy and have a controlled type of slowdown. They're actually spending 17% of their GDP on internal workings like roads and fixtures and other things. And that's an incredible sum of money. So I think they're on the right track, but they certainly have a slowdown.
All right, Gary, so let's get started with your next educational segment. I believe you have some new types of charts for us. What do you have in store?
Well, one of the things that I've been asked many, many times is why did I become a market technician as opposed to looking at fundamental data? I consider myself a hybrid technician, so I do look at both. But the mathematics that are involved in charting seems to have a pristine or unbiased view. It's math. And no one has done it longer or better than the Japanese. Candlestick charts actually were developed in the late part of the 1600s. So they really got a head start on us. And the one thing that I can say is the candlestick chart itself is really a visual representation of what the market is doing. And they've been able to identify certain formations or patterns that are indicative of certain types of market sentiment. So the insight is incredible.
And how long have you been using them for, Gary?
I started using them in the late 80s, so I know it ages me, but for quite some time, well over 20 years.
All right, Gary, so let's get started. You'll walk us through this introduction.
Absolutely, and I hope that the viewers really learn something, because I think the insight available with both Heikin-Ashi, which is the average charts, and candlestick charts are far superior in terms of the information and the insights you get when you compare it to a Western bar chart.
So let's get started, Gary.
I'm really excited about today's lesson. We're going to start at the beginning and really look at different types of charts. I really want to hone in and specialize on a Japanese type of charts called Heikin-Ashi. I want to start at the beginning and take a look at a simple bar chart. A bar chart price movement over time is plotting four variables. The first variable that it plots is going to be where the market opens, and it will do that by having a little horizontal line to the left of this vertical line. The vertical line, of course, is going to represent the low at the bottom, the high at the top, and then another horizontal line to the right, and that is going to represent the close. That, simply put, is a bar chart. Now, all I have done is converted our daily bar chart into a weekly chart. We're now going to convert it into a candlestick chart. You might ask me, why is it so important to understand these different types of charts, especially since a bar chart and a candlestick chart are using identical information sets, open, low, high, and close, simply displaying them differently? Well, it's actually the way they display it which is so unique. The Japanese who have been creating these types of charts for hundreds of years. In fact, it started in the 1600s with the Dojima Rice Exchange. And to create a candlestick chart is to create, I believe, a word picture far superior to a bar chart. Now, all we do to create a candlestick chart is we have a rectangle drawn in between the open and closing price. And this is what I mean. When we look at a straight bar chart, which is simply going to be a line, our open and our close, to create a candlestick from that, we're simply going to draw a rectangle around the entire area of the open and closing price, and will then fill in the color in two different ways, whether the market is trading up, in other words, the market closed higher than it opened, or it closes lower than it opened. As you can see, I have converted our bar chart into a candlestick chart, and instantly you get a lot more information by these visual cues. In this particular chart, up bars, meaning they close higher on the week, it's weekly chart, than they opened on Monday, are green, lower closes are red. So the first thing is you get a much more clear visual representation of price movement, because as you can see, during periods where you get very, very nice rallies, such as right in here, you can see that the market can be characterized by a succession or a continuation of up close weeks. On the same hand, when you take a look at a market which is in a congestive period, you get alternating candle color. And of course, downtrends or corrections in the market can be characterized by an abundance of down weeks, and that would be red candles. As you can see right in here, current activity in the gold market. There are an abundance of candlestick patterns, and that warrants a separate show for that topic, because today's topic is what I believe to be one of the easiest charts to begin to use and will provide you with an incredible amount of information. The Heikin-Ashi Japanese average chart. As you can see, it looks very, very similar to a candlestick chart, but there's a key difference. The key difference is that rather than using the opening price as a fix on the open, the Japanese average chart uses the midpoint of the prior session. So they're taking the midpoint of the prior week on this weekly chart, and they're using that as the open for the current candle or current week on this weekly chart. Now, the first thing that you can see is it immediately reduces noise in the market. Uptrends, straight solid green candles all the way up. You don't get the erratic changes that you saw with the candlestick chart. The second thing that you'll notice is that in a downtrend, of course, straight red candles. And then lastly, just on the surface, when the market is congested, you get alternating candle color. In terms of how you read a Heikin-Ashi or Japanese candlestick chart, it's pretty straightforward and pretty simple. The trend is defined, of course, by the color coding. Green meaning an uptrend, red meaning downtrend. But here's where it gets very interesting. And that is because we are fixing the open as the prior midpoint, on an uptrend, you will define the strength of a trend by looking at two things. The first thing that you're going to look at is, simply put, the body size, how large the body is itself. And of course, the larger the body, the stronger the trend, because that's simply telling you the difference between the midpoint last week and where it is currently trading. The second thing that we look for in a Heikin-Ashi is going to be an absence of lower wicks as the market moves up and upper wicks when the market moves down. And let me show you what I mean by that. When we look at, for example, this particular rally, you can see that there is an absence of lower wicks. And what that simply says is that the market opened above the midpoint. That's pretty strong. The same thing on a downtrend. You can see the absence of these lower wicks. And then lastly, the last thing to look for in a Heikin-Ashi chart is that when you are looking at pivot points or reversal points, they're usually a very, very small bodied candle. And you can see, for example, right at this pivotal point here, how small the body is right in there. Heikin-Ashi.
Gary, thank you so much for that third installment from your educational series. I know our viewers appreciate it. Thank you.
My pleasure as always.
And I always ask you, Gary, there's still more to come, right?
Always more to come. You never stop learning.
Thank you, Gary. We'll see you soon for another segment. And thank you for watching this edition of Chart This with Gary Wagner. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.